All right, good morning, everyone. It's Sunday, 11:50 a.m., October 11th. I have two very knowledgeable gentlemen on the call with me today, Faisal and Austin. Austin, especially, it's been a while since we've heard from him, so I'm super excited to have him on today because today's topics, we've got a lot to cover. We're going to talk about ESG stocks, in particular, some solar stocks that Austin and Faisal have been watching, the past, present, and future juxtaposition of what's happening in the stock market, what we could be expecting going into election time. We're going to also cover some of the fixed income markets, the bond markets, and the corporate bond markets particularly. And then we're also going to cover some tech stocks. So at the end of this video, you will have a decent amount of knowledge of how the three of us have been looking at U.S. equities, bonds, and how we're balancing our risk and managing our positions from Austin to Faisal and myself. And hopefully what you could take away from this call is how we are looking at the market from present day going into election time, and then of course any particular risks associated that we see upcoming. So without further ado, welcome Faisal and welcome Austin.
Hey, glad to be here.
Thank you. I was expecting a drum roll, but it's all right. That's fine.
Hey, we'll definitely get the drum roll out once we put out this video and people can see that we have been looking at the markets in a very unique manner, which I personally think, Faisal especially, you've been putting out some great content for us, and you put out a video just yesterday. And again, I'm going to share it with the viewers right here. It's in the live equities updates. This is for Advantage members right here. And then I also put it up in our announcements channel. And this was a really solid video. I got to watch it. Very actionable items and good takeaways of how Faisal sees the market. So with that being said, let's start off with the basics, right? First of all, where are you guys in terms of your mindset, your approach to the market? Bull, bear, neutral? Let's start off with Austin.
Okay, so ever since I have joined calls on with you guys, I've been I really haven't changed my outlook. The first time I was on the call, and I remember saying, hey, I long for the day when the market goes down 10 to 15 or maybe 20%, because that's a gift. And really nothing has changed. Your viewers, and I'm assuming that most of them are young investors, and I'm going to basically give you once again the parameters of investing. Nothing supersedes Fed's liquidity train. Nothing supersedes Fed's liquidity train. And this liquidity train's, I don't know if you're noticing or not, but it's getting bigger. No matter who wins the election, they are going to Democrats are talking about pumping in another $3 trillion to revive this economy. So as a young investor, I've said this many times, most of the stuff you hear out there is a lot of noise. Pay attention to what Fed is telling you and what they are going to do. I continue to remain very positive on the market, especially, you are going to have an environment where the growth is going to be questionable until we get out of this pandemic stuff. Stay positive. Growth stocks are very valuable. The technology is changing this world in front of our eyes. And it's on the other side of the pandemic, I see just tremendous innovations which is going to bring overall cost for these corporations tremendously lower. And I would say another thing that as young investors, I hear this a lot. Market is overvalued. Market may sell off or whatever. In a bull market, stop spending so much time on trying to find short or trying to time the market. If you are so convinced the market is very overbought temporarily, take some money off the table. But don't try to act like a hedge fund and time the market and short the stocks, because it never pays off. Most of us do not have the ability nor the resources to do tremendous research to short stocks. So for all the young investors, I'm going to tell you, spend your time researching good solid stocks, just 10 stocks that have earnings that are growing better than 30%, that are growing their top line by 30%, have a good moat, good expanding market, and just build your portfolio around these stocks. So I remain very positive, and these are certain sectors, that I'm sure we'll talk about during this presentation. I really haven't changed anything. Although I'm invested probably around maybe a little north of 40%, but I'm up almost 20% for the year. So, and I really don't spend that much time researching and watching the market.
Got it. Well, I think that's a very fair assessment. So I guess a simple way to put it is you are still pretty bullish on the market. The Fed rules all, and hard to supersede the Fed with the very simulative, I guess, dovish approach that they have on the market. And your take is that pullbacks are effectively, something that could be bought. Is that a fair summary?
Should be bought.
Should be bought. Okay, should be bought. All right. Well, not investment advice, but of course, we're going to frame it in that context. Should be bought. Okay. All right. Let me get Faisal's take on it now.
Yeah, I'm definitely a little bit more neutral. Just basically, I was a lot more bearish. I want to say a couple weeks ago when there was a little bit of fragility in tech and also in regards to what exactly was driving this market, whether or not you were going to get Democrats or Republicans, that type of market volatility related to the election. I just didn't feel comfortable about seeing stocks like, these stocks, just like Austin said, these high growth stocks are very, very valuable. They have great technology, but not every single one of them is Amazon. Not every one of them is a Tesla. Not every one of them deserves to be trading at 10,000 or 1,600 PE, because at any point or at no point, I think, will they ever catch up. Like we've seen earnings catch up with Amazon. We've seen earnings catch up to NVIDIA. And even though those stocks were at like 300, 400 PE just 2-3 years ago, they've had that moat and that distinct ability to really return profitability back at a quick time. And I think just based on how broad the rally has been for every single high growth stock, I think that there's definitely some risk to that. And that in turn leads me to believe that there's a lot of overcomplacency, at least in the short term. I agree that there's a lot of liquidity in the market, and that in turn, I'm very bullish on the medium term. But as far as the short term is concerned, and definitely considering that there are news events coming up that once again, they're mostly noise if you're a medium or long-term investor, but for the short term, they could lead to a lot of volatility. And even though we get a ton of volatility to the upside where, just this week you had leaders like Fastly go up 32%, I think. You had almost all high growth stocks go up an average of 10% in 1 week. When you have that type of upside volatility, it really, it just creates a lot of uncertainty as far as what the downside volatility could be when a pullback does come. And I'm not going to say that we're out of the woods yet as far as, a correction cycle still being in place. But for the most part, I mean, just based on what happened last week, you can definitely say the momentum is with the bulls. You not only saw high growth stocks do really well, but you also saw a broadening out in the market. You had new highs from Dollar General, United Health, DHR. These are all different sector leaders. And so when you have that broadening out in the market and not just with it being very narrow like it was, a couple months ago when it was just 5 stocks leading it, that's a very positive sign for the short term. So I remain neutral. I'm not going to say that even though there were positive signs last week that I'm ready to buy, but you know, I just remain very hesitant because the volatility will be, I think, scary. We already saw a glimpse of it with that 3-day correction where we had 10%, falling in 3 days in the Nasdaq, and I think that's very indicative of the type of market environment that we're in. And I think even though you get these great weeks like last week where most stocks go up 10%, 20%, it's definitely safe to assume that the risk to the downside could also be just as volatile. And so I remain neutral. I still think things are a little bit more extended, but now is not the time, I don't know, to really bet that high growth stocks are going to have another leg up. I think just based on what I've seen with the broadening out of the market, I think now may be the time to get into the healthcare sector, the industrials, which are set to have a really great 2021 if that infrastructure bill gets passed. This could be that time for them because they have a lot of runway left. And I think maybe the most has been priced in for these high growth stocks just based on the fact that you're seeing broad volatility. Like you can see secular volatility in the really great leaders, but I don't think I'm seeing that yet.
So there's definitely a lot to unpack here. Personally, I think I'm right there in the middle between Faisal and Austin in terms of how I'm looking at the market. Although I think Austin's argument about the Fed being the institution or the entity that is basically on God mode when it comes to handling and managing the market, which is that it's very hard to see a world where the Fed's stimulative policy is not going to create an environment that creates a risk-on posture for most portfolio managers, asset managers in the space. Because if we're looking around the world, there is not a single market, it's definitely not the bond market in the US, that's actually paying yield. So most of that momentum and gains are actually carried into US equities. And so if we're looking at the US stock market giving the most yield, it ain't the bond market, and it's definitely not any other market in the world. Maybe, private equity. Where does the money go? Well, the money probably goes where the money's already going, which is US equity. So I'm kind of in the boat of looking at Austin's perspective as this is where the money is going, and it will flow there until we may see another black swan or white swan event, whatever you want to call it. Or maybe at some point, maybe the stimulative policy drops. Maybe something happens that, maybe the Fed just has a different posture. I don't see a reason why that would happen because, as Austin has, mentioned, whether it's the Dems or the Republicans, they're both going to continue with the stimulative policy. So it doesn't matter who takes office. I think we already know we're all getting free money anyway. I guess the larger, question of it all, and this is something that I really, really struggle with, which is that we've gone up so high, so fast in so many different aspects of the US equities market. And then I think to myself, we're having, again, these stimulus talks just after a few months of, stimulus relief that we had just several months ago. So how strong can the economy and the stock market be when you need constant flow of free created capital? So that's, I guess, my question. I'll let either of you answer that.
Yeah, no, I'll jump on this. And I totally agree with what you were talking about. One thing to remember as far as investing is concerned, global money has to go somewhere. They go into, they're looking for yield. And the reason is because there is trillions and trillions of dollars of global money in pension plans that has to meet their mandatory requirements. They have to pay off their shareholders or retirees. And most of them are, most of the plans are hooked on about 7 to 7.5% return. They have to maintain that to be able to meet their requirement. And in this zero interest rate environment, it ain't the fixed bond market. So the money will eventually, money keeps finding home in the equity market, you know. So that's a very important thing to remember, that there's a trillions of dollars of pension money floating around. They're looking for a minimum of 7.5% return on their money. If they don't, those pension plans go broke. And they have liabilities. They have guaranteed liabilities to their retirees, you know. So keep that in mind. And you know, what I see in the market is, I think the market is sensing that vaccine is around the corner. So the next phase, I agree with Faisal, that I see is that over the next month to 2 months, you know, there's going to be an announcement on the vaccine front, and these stocks, such as you know, travel related stocks, or you know, Friday I bought Disney, you know, because I think that they are so correlated with vaccine, even short term. And I agree with also Faisal that some of these cloud stocks, growth stocks, may just go sideways for a while, you know, because they had a very good run. And as we go forward after the election, the industrials, you know, will kickstart. So no, I totally agree with you guys.
Perfect. So here are some, you know, other things that I'd like to discuss, because as younger traders, we have you know, a wide sort of demographic of viewers and people who are part of our community, some of whom are, you know, relatively young, like my age or Faisal's age, and there's some other ones who are, you know, 40, 50, 60 years old. And I think all of us are kind of looking at the market, and we're thinking along the lines of, okay, we know that the Fed has this policy. We know that, you know, for the most part, things are going to, quote unquote, just keep going up. How do we sort of balance our risk and manage our risk in situations where we feel like the market is overextended? And if we get caught to the downside, instead of being caught in that phase of, you know, hoping and wishing and praying and just being frozen, do we double down and we say, you know what? I mean, if a 10, 20% pullback comes, I should, you know, hop back in, or rather double down on my position. How do you guys look at the market from that perspective, where you get caught like, you know, deer in headlights, where the market pulls back, and then square that off with knowing the macro picture, which is money has to go somewhere, the Fed has your back, market's generally, you know, uptrending. So I'd like to sort of hear your guys's, you know, day-to-day mental and emotional approach towards that.
I'll go first, and I'll share my experience. I've been doing it for a while. You know, the as far as managing risk is very important, but timing the black swan events is impossible. It's and I guarantee you could write it down, that we are going to see many corrections of 10 to 20%, where growth stocks sell off 30 to 50%. You know, and that's guaranteed to happen. You know, yeah. To me, what the way I manage risk is, when I think there's more than 50% risk in the market, significant risk, I want to trim my position. I want to take some money off the table and hope to be able to buy them back, you know, at a cheaper price. You know, sometime I'm right, sometime I'm wrong. For younger investors, I would tell you, you know, it comes with a lot of experience to be able to tell, well, hey, this market is getting, or sector is getting very frothy, and there's a tremendous amount of risk. You know, for younger investors, I'll say, you know, look at the chart, and if your growth stocks breaks 6-week moving average on high volume, you know, that's a good sign that, hey, the correction is about about to happen. You know, pay attention to individual stocks, but after a while, if you've been doing it for a while, you are going to get a sense when the market is giving you a signal. You know, if I was totally bullish right now, 100%, I would be 100% invested. I'm not, but I haven't sold. I haven't gone below 40% either. You know, and if I can manage my risk, and I'm hoping, and hoping that one of these days, some of these stocks that I want to own and some of these stocks I want to add to, take a beating. So in equities, there's always risk, always risk.
Fair point. Fair point. Okay. Well, I want to hear Faisal's take on this too, is, the emotional approach, the mental approach of, looking at the market, say it's pulling back 10, 20%. How do you jump in? When do you think about jumping out? What are the parameters that you look out for?
Well, the main thing I look out for is it's all about the leaders. This market has shown that it can be dominated by a certain industry or a certain group of stocks well before the broad market takes into effect. And it's really important to try and identify those leaders. And a lot of times it's a lot easier than you'd think. It would be the ones that are growing and also the safest, like beforehand. You had Apple, Microsoft, and the FANG names really lead the market for an extended period of time. And then they've pulled back recently. And in this last leg, you've actually seen small caps and high growth lead it, whereas stocks like Apple and Microsoft still continue to chop. Like, for instance, you've had stocks like Fastly make an all-time high, Zoom make an all-time high within the last couple of weeks. And then at the same time, you're not seeing that same all-time high, fresh all-time high from stocks like Apple or Microsoft, which were the predominant leaders beforehand. So if I get caught in a pullback, and I'm sure it'll happen at some point, the majority or the main factors that I look at is there leadership in the market when things look dire? Because almost every single time that things have looked dire, leadership always pops up. There's like Jim Cramer said, there's always a bull market somewhere, even if it's in a few individual stocks or a big case of stocks. And I think when you identify those leaders, it's probably best to just hitch your wagon on them. Like, for instance, it was probably the best bet to hitch your wagon on Apple, even though it was one of the safest stocks. No one thought the price could grow as much as it did, but it did. And I just predominantly look for that leadership during time when times are tough, and it has to be things that are making sense. So during the coronavirus, obviously it made sense to invest in tech because tech was the only thing that was growing. So for this next cycle, even if we get a pullback and the main headline news would be that things are overvalued, well, you have to look for the next year to 2 years. Where is the growth going to come from? Sure, it could come from technology, but some could say it's already been priced in, and it may be overpriced in even after a pullback. And you, like Austin said, you could get that consolidation period, and it could be a very, very huge range of consolidation because these stocks have gone up 200, 300, 400% in 6 months. So, when that pullback happens, take a step back, understand where you think the growth will come from for the next 1 to 2 years. Don't be super pessimistic. It's never wise to be super pessimistic during a pullback because you are always going to get some opportunity to buy a great stock that in 6 months down the road, you'll be so thankful that you ended up in that sector or that stock. So that's basically what I look for. It comes down to leadership.
Yeah, that's a great assessment. I think to relate this back to something our audience pays a lot of attention to, which is crypto, because we're predominantly, we're focused on the crypto side, and then Faisal, of course, delivers the equities analysis. The way I've been talking about Bitcoin and crypto is that it's a higher beta asset class, right? Compared to US equities, bonds, gold, any other precious metal, crypto itself is, first of all, becoming a widely accepted, known, traded asset class. And so when I see things like crypto taking off or selling off, any direction really, I think that this is the perfect reasoning and positioning of how the US equities or even, dollar bears or dollar bulls are going to probably follow. Because if crypto is actually going up, especially something like Bitcoin, that tells me that managers overall, money managers, are more risk on. right? And if Bitcoin is going up, more often than not, what I've told Faisal about is I've seen literally the S&P 500 take off within minutes or hours right behind Bitcoin. Sometimes it also happens to be the case that the S&P 500 leads the movement up or down, but then Bitcoin swiftly follows. So this tells me two things. Number one, these two asset classes, whether it's US equities or crypto, they're now very tightly correlated. And correlation to me signifies that money flows are being utilized in the same manner in terms of risk, in terms of how managers feel like deploying their capital. The way I'm looking at Bitcoin right now is that there's no fear, right? I mean, across the board, whether you do sentiment analysis, price analysis, volume analysis, you look at L2 data, everything is kind of telling me people are bullish. Pullbacks are bought pretty swiftly. Key levels on the weekly and monthly time frame are being defended, especially moving averages. So this is where what I was saying earlier is, I'm kind of gravitating towards what Austin was saying earlier is, the whole idea of this Fed policy, it has really created an environment where everyone is hanging on by a thread to the word of the Fed, to the word of Congress potentially passing stimulus. And I think this was highly noticeable. I think, what was it, a week and a half ago when Trump tweeted that there's probably not going to be a stimulus deal. And then the S&P 500 dropped, I think, 1.5%. Bitcoin dropped by about 2.5%, 3%. And then literally that same night, Trump then again tweeted, hey, I'm ready for the $1,200 stimulus checks if Congress is willing to work with me. And then again, futures picked that up. And then now we saw, the local higher highs. So I'm kind of looking at the fact that I think the crypto markets are actually telling us that things are looking good. We're looking for more stimulus, and there ain't no issue, when it comes to, free money being created.
I agree. And remember that once we are on the other side of this coronavirus, you are going to see 8 to 12% GDP growth. You're going to see very inflated numbers, and this market, with the liquidity that is being put into this market, this market the S&P earnings will snap back very fast, provided that there is a vaccine and all the good things do happen. You just cannot look at the news today, how dire it looks, and predict what the market is going to do. Market is a discounting mechanism, and market is right now, in my opinion, is assuming that there is going to be a vaccine very shortly, and you're going to see now those stocks, the sector that got really hurt because of the virus, they will snap back. So like Faisal said, there's always bull market somewhere, and as an astute investor, make a list of the stocks. I mean, when this pandemic started, there were people out there that figured out, hey, we need to buy Zoom, we need to buy DocuSign, we need to buy what's the other telehealth company, and these companies just went bonker, and so there are opportunities every day. Pay attention to and do your research, do your homework, and I tell you what, in my 25 years investing, I've made 99.9% of all of my money going long good companies. I dabble here and there, buying puts or maybe shorting a few stocks on them, but it never amounts to anything, So I would again reiterate that, do your research and just find good, solid companies, and that's how you're going to build wealth. Trading
Yeah.
short never seems to pan out for me, and I've tried it. Trust me, I've tried it through my investing careers.
Yeah, fair point. So let's talk about, there's a bull market somewhere, because personally, I still think that Bitcoin has a little bit more to prove in terms of, its larger bull market, but it has definitely proven so that it's gone through a tremendous bull cycle thus far. In the stock side, I want to pick Faisal's brain on this. Let's talk a little bit about tech stocks. Let's talk a little bit about, ESG stocks, or within that solar stocks. So Faisal, you want to jump in on that?
Yeah, man. Like the solar stocks, there's two that I have always kept an eye on: SEDG, SolarEdge, and Enphase. I mean, I just checked Enphase. I was so surprised to think, I think I checked it last week or so. I've been keeping an eye on SolarEdge, but Enphase, the last time I checked it, it was like under $100, and then just this week it's now at 107. I think it's ENPH.
Oh, ENPH.
Yeah. But one of them, I forgot which one. One of them deals with the commercial side of solar, and another one deals with the residential side. Both of them have fantastic fundamentals. You guys should definitely check them out when you have the time. The trend of solar and clean energy in general is obviously, it could be something that's indicating a Democrat sweep or something like that. I've read some things about that. That's why these stocks are just going bonkers right now, because it's just becoming more apparent that in the polls that Biden is winning, going to win the election. And so, I don't really know what to make of a move like this, because I just checked. I think SolarEdge has gone up 50%. This is a multi-billion-dollar company, by the way. It's gone up 50% in like 15 days. And I think to myself, okay, I get that this market is a highly volatile market. It's, in general, we've seen it happen. I mean, I don't know if we've seen this happen with tech stocks to this degree, but oh, dang, almost 70%. And so, I get that it's highly volatile, and that at this stage, valuations do not matter. You can have a 50% gain and a company make, increase its market cap by $10 billion and it not increase any type of sales. You could have that, I guess. But once again, it just begs a question short term. It's like, are people just playing catch up, and valuations just getting overinflated? I feel like this is somewhat of an example when you see this type of gain. Once again, this is not a small cap company. This is one of the biggest solar companies in the country, or I think it's an Israeli company actually, but huge company nonetheless. So you're having this type of volatility that I'm really not sure how to read it, and I would love to get Austin's opinion on it, because I wasn't trading when the tech bubble happened, but I mean, to see these types of moves, 70% in 15 days, maybe even less, when there's really no change in the fundamental news or outlook, maybe it's just pre-pricing in an election. I would just love to get your take on that and how you read that.
Okay, well, I actually I bought 10, which is an ETF for SolarEdge. I mean, for solar industry, about a couple of months ago. And I still have it, and the reason I bought it, because I was reading somewhere how fast the solar panel prices were dropping. They have over the last couple of years or so, they have come down almost 70%, and this industry is going to disrupt the multi-trillion-dollar utility industry. Just imagine this. We are still in the first inning, probably in the first inning, because what is happening on the solar side is it is still not widely distributed, and primarily because there's a heavy regulations in this industry. And over the next couple of years or so, this industry is going to get deregulated. I was watching Bill Maher last night, and he was saying he lives in California, and he said he spent $100,000 putting solar panels on his house, and for 3 years he's been fighting with his local city council, to actually turn those solar panels off. And the reason is because the regulations, there's so much red tape, that he has not been able to do it, and I think that thing is going to change over the next couple of years, and you will see. And also on the other side, the missing ingredient is development of a long-range battery, which Tesla and some of his other guys are working on, which would be here, in my opinion, in a couple of years or so. That will change everything, So I am very, very bullish on this industry. I think that it's a game changer, where people would not be relying on your local utilities for electricity, and actually they'll be able to sell energy back to them. That's the kind of world we're going to live in in a very short period. So how do you trade this thing? The same thing. You hope and pray that there's a correction and these stocks sell off 20, 30, 50%. You add to your position, because I definitely don't have, my full position in these stocks yet. So this is the way I look at it, that this is the industry that is about to be huge industry that's about to be disrupted. And I want to have, good participation in that.
Perfect. So TAN, SEDG, and Enphase are some tickers that our viewers can pay attention to in the solar space.
Yeah, I mean, the reason you want to own TAN is because it has all these names, and I have no idea that who is going to be the big winner. So hopefully, I mean, TAN looks like this has the same kind of chart that these stocks are showing.
Austin, can you give us a rundown just real quick? When you see a movement like this, and let's just say, you bought in, I don't know, around $40 or something. So you're almost, 100% up in your position.
Right.
How do you go about deciding when to start trimming down your position? Is it a percentage-based thing? Is it like a Fibonacci extension? Do you look at valuations? How do you go about trimming down your position? And then, of course, what is the percentage of that trimming down that you do?
Okay. First of all, when I bought TAN, I took my initial position. I wanted to do some more work on it. I wanted to see, understand the industry a little bit better. So
okay, well, wait. So hang on one second, Austin. I wanted to also break that down too, because what we're going to go through is just a brief primer on your portfolio or your asset allocation construction. So let's just say, first initial day, you come into the office and you're thinking, okay, there's something happening in the solar industry. I want to get in. Is that initially your thought process?
Pretty much. And
okay.
but I would start with a small initial position. I would maybe take a 1% position,
okay,
while I'm doing my work, and after I look at it and I see, hey, maybe it's not such a great idea, I'm going to sell it. And if not, I'm going to start to build position, maybe go up to, I used to go up to 10%, but nowadays I go up to maybe 6%,
Okay.
And if I in a chart like this, if I had a 6% position, I would probably take 2% off,
Got it.
Because it looks like straight up, and one of these days, these stocks are going to pull back 30, 40, 50%. And at that point, I want to, jump in and take my full position. So right now I don't have really enough to be looking at trimming.
Okay. Fair point. Yeah, I was just curious about how you go about your I guess position construction process, because I think something that I think a lot of people struggle with is what kind of asset allocation or capital allocation do you have on, say, an asset to asset basis? Like, for example, if it's TAN versus Apple, Apple versus, I don't know, NextEra Energy, do you have, say, a percentage base allocation in a specific sector? Or do you say, you know what, an investment is an investment, so it doesn't matter if I put 1% to Apple or 1% to NextEra, you kind of weight them the same way?
Well, you have to look at, your own conviction. If I have a high conviction on a name, I'm willing to take a bigger position, So, but I don't follow that many stocks. I have in my portfolio, maybe right now, maybe 10 stocks, that I can keep an eye on, that I could, read up on and do some work on. So, I normally would start up and never, no matter how high I am, I never go in and buy full position right away. I want to start small and build the position as my confidence in the company builds.
Got it. I think that's a solid answer. Faisal, what about you? I mean, I'm curious about your style of investing and trading and portfolio construction.
Yeah, no, well, mine kind of starts off the same way. If I want to get into an industry, I'll, and I'm interested in something like solar, it usually takes me, I won't buy a position first, but I'll try and find the best stock in that industry, whether it's in terms of fundamentals, the growth estimates, gross margins. I'll usually compare pretty much most of the best performing stocks with the highest relative strength in that industry, look at which fundamentals I like, look at the estimates, and then I'll use my technical formula to get in. And usually when I get in, it'll be somewhere, it won't be as small as 1%, it'll be more 5%. And then, if I do get a sizable pullback, I have no problem doubling down or adding, 2.5% or something like that. And I think it's important to not keep yourself too stretched as far as having so many investments. If you like an idea and you like a company that fits that idea, you should feel fine with allocating 10%, 15% to that individual idea, especially if your conviction level is high. So it kind of fits the same way that Austin does, but I think I'm going to probably do the comparative work before I get into that initial position. But sometimes you miss out, like, at the time when you get that idea, it could be the right time to buy, and doing that research and that extra filtration is, it could end up making you miss the right time to get in. So I totally agree that you could take a 1% position if you like that idea and have strong conviction in that. I think that's totally cool. I may start doing that myself.
And one of the things I want to add for your listeners is, I think I've been, over the last 20, 30 years, I've been fairly successful as an investor in the market. And somebody asked me the other day, what is the secret of your success? And I said, from day one, what made me good investor was that I'm just an avid reader. I'm always out there seeking knowledge. And I read anything and everything because I want to be smarter today than I was yesterday. I don't think I'm the world's smartest guy, but if I see somebody else who I think is very smart, I follow them like a hawk. I follow visionary people. I follow people that have, very positive outlook toward the world. So this is where I get my ideas. How did I know about, the solar pricings dropping so fast? A couple of months ago, I follow somebody on Twitter, and he tweeted, hey, he put out some data. He said, these numbers look unbelievable, and I took that little information, I did some work, and I said, damn, this is unbelievable. The rate of the percentage of the rate of percentage that the solar cost is going down is unbelievable. That gave me an idea to look this as an investment. because I was waiting for this kind of data. So I would tell everybody, read, get into habit of reading and following smart people. This is where you get your ideas.
Yeah, I think that's a fantastic suggestion. And the one good thing about our community is we definitely surround ourselves with the knowledge and education because a lot of us are relatively young, and even the older folks in our community, they're happy to share their resources. A lot of us, either are following some of the same astute, traders or investors as you are, Austin, on Twitter, or we are, a lot of us are actually signed up for, tons of different newsletters, different, capital investment strategy companies who provide, some of this free research. So lots of content that kind of gets shared around. So I'm kind of blessed to be in our community. So I got two final questions for you guys, and I'm going to let Faisal kind of tie this together, and we'll end the call from there. Number one, do you utilize stops, or do you have a general, view of the market where you're thinking, okay, something is clearly wrong in this position or today's, day in the market, and do you then just start trimming down and selling your positions right away? And the second question is, what are your views, for the next coming weeks going into election time? So Faisal, go ahead.
In this market volatility now, I think stops can really get you in trouble. I mean, they're good parameters because obviously there is a lot of volatility. So some people who see that as a need to put down stops, I totally get that. But because there's a lot of daily intraday volatility, I think it could definitely get you into a lot of trouble. But for the most part, if you're a long-term investor, yes, you should always have stops on your things, whether you've made 50% and you got to make sure that you keep that 25%. That's a place where I would use a stop. But for the most part, if I'm a trader, short-term trader, no, it's a very volatile market, and I tend to not use stops because I'm more of a short-term. Most of my trades are short-term, so no, I don't really utilize stops that much. It's mostly based on the leadership, the peers, how the broad factors are kind of mixing together, and once they all paint a clear picture, that's when I'll decide to trim or add or whatever the case may be.
Perfect.
Going forward, I was really surprised by this week. Like if you guys saw that video that I put out Friday, I mean, I thought this was one of the best weeks for the market this year. And we've had fantastic weeks where I think the market's gone up even more. And coming into the week, I was not optimistic at all. I thought technically we were setting up for more downside, and ultimately we got a very nice gap up Monday, and just you saw the breadth of the market expand to a level that I did not think you would see, considering all the economic factors that are still weighing, whether it's COVID, the labor market, everything like that. You are just seeing this broad participation, especially in the small caps. People don't pay enough attention to the small caps because they've been underperforming, but man, I think they went up 7% this week. And it's just, they've had a fantastic week, and they've completely led the market, done better than the NASDAQ, everything. So this broadening out is probably one of the most positive trends, because as you've seen the market broaden out, you've gotten all-time highs from different sectors. You mentioned Nextera Energy made another all-time, or I think it made an all-time high this Friday. That's a utility sector leader, and Procter & Gamble, a consumer defensive leader, made an all-time high. You are seeing all-time highs across the board. This is not just a tech market anymore. And I think, it's very tough to be like extremely bearish in the short term. It's not an easy game to play. And I think going into the election time, there's definitely going to be some volatility. As I said, I think a lot of the stuff that we will see in the coming weeks that would lead to market volatility is noise in the medium term and the long run. But it can still create this huge pullback. Like, I don't think that's out of the question at all. The thing is, you should definitely buy those pullbacks. It all varies on what you buy during those pullbacks. But going into the election, I still expect volatility to happen. I don't think we are completely out of the woods as of yet, but so far it's looking like the internals are very strong. And as the market broadens out, I think that could only be seen as positive for the market. And you're still having risk assets make all-time highs too, like the high growth stocks. And as I said, the small caps are the best performing index over the past week. So these high risk assets mixed with the broadening of the market, it was a very strong week, and I expect gains to continue this week on. But like, once again, I'm not going to be surprised if we get a pullback before the election time, because I think taxes will if the market's pricing in a Biden win, I think taxes, corporate taxes, capital gains taxes will definitely spook some investors, and you will get some volatility in relation to that. I don't think that's out of the question at all. So I think that's how it'll play out.
And just to add to that, I mean, aside from taxes, I think we're definitely going to see a hammer taken to some of these big tech companies, right? The whole idea of monopolizing that particular segment with these 4 or 5 big concentrated tech companies, those might get hammered too. So that's, something else to pay attention to.
Yeah, totally.
Austin, stops, and then your thoughts going into election time.
As far as the stops are concerned, I try to buy the stock right, and if the stock's going against me, 6 to 8%, I'm definitely going to question my investment thesis. And if I still believe it, I'll probably add to the position. And if I see I'll try to read some research, and if I see some cracks in my thesis, I don't want to take huge losses. So I would probably step aside and revisit the idea later. And on the upside, if I buy a stock and it quickly runs up 20 to 25%, I'm going to sell portion of my holding, and I'll take some money off the table. But if it's a high conviction idea, and I'm willing to live with the volatility, then that's the strategy I'm going to use. So it depends if it's just how convinced I am of what I own.
Got it. Good to know. And then finally, your last thoughts on the last couple of weeks going into election time for the market.
I think the same thing. The market, what we know today about taxes going up, capital gains taxes going up. If Biden wins, market already knows. But market is paying attention to, on the other side, what these guys are going to do. And again, going back to the stimulus, that stimulus is more powerful than anything. If the market sells off for 10%, and it can, I think it's not going to be a news, but I tell you that there's still a lot of money. I mean, if you look at the money flow into the equity market, it is still going out. People are still getting out of the market, the average investor, and eventually that money needs to come back into the market. All that money that is still in the fixed income market, once these guys start losing money in a big way, that money is going to shift back into the equity market. So I'm very positive. Short-term volatility in the market, I can never predict, nor I really care. I'm just looking at my investments, and I'm looking, if they put them on sale, I'm gonna buy some more. I'm right now, when I'm positioned myself, I bought Disney Friday. I think that once the vaccine news comes out, these stocks, travel-related stocks, are good. And I own some calls on Delta Airline. They're trades. But I continue to hold some of the software stocks. I've been doing some work on Walmart. I'm really getting excited about what these guys are doing. They're becoming more technology company than anything else. That's how I'm looking at the market. I still have
Perfect.
a lot of cash. If the market pulls back, I have a lot of cash to deploy.
Awesome. Well, I think we'll end it on that note. I think this was a very informative and constructive conversation. Lots of actionable items for our viewers who are watching. Again, make sure y'all hit the thumbs up for Austin and Faisal for their time and energy and information. But I hope to see you guys again soon, in person or on video. But yeah, other than that, guys, thank you so much, and good luck in the trading week ahead.
All right, guys, stay safe.
Peace.